All right. Well, good morning, everyone. I hope you're enjoying the last of the breakfast and coffee. My name is Andrew Bigart. I'm a partner at the law firm of Venable in Washington, D.C., where I work with banks, payment companies, fintechs on regulatory compliance and business transactions. And I'm very excited today to be able to moderate this panel on emerging fraud threats, what you need to know. Our hope today is that we'll be able to cover a pretty broad range of topics, some of which you've heard in some of the other panels, but really kind of looking at what we're seeing in terms of fraud threats, what we maybe see coming down the line, and what are some of the best tools that are out there that you can use, or things to be thinking about in terms of managing that type of risk. I'm lucky today to be joined by really great panel. I've got Andy McHale to my immediate right, Senior Director of Product at Spreedly, and then to his right, Michael Timoney, Vice President, Secure Payments at the Federal Reserve Financial Systems. So I guess we'll just go ahead and in a few minutes jump into our Q&A. I would like the panelists to maybe each give just a quick overview of their current roles and kind of where the issue of fraud kind of touches the work that they do on a daily basis.
Happy to start. Hi, everyone. This is the session of learn from the stuff that we've screwed up over the years, so you can kind of take that for what it is. I've spent most of my career in payments and fraud, spanning back from the eBay and PayPal ecosystem for around 15 years, seen lots of different things through marketplaces, through payment services and emerging markets and things. So lots of things that I think I heard the previous panel talk about a lot, and I'm sure you guys heard a bunch yesterday as well of things we'll keep talking about around incoming pressure on your merchant accounts and from consumer activity and threats, but also things around protecting your accounts and authentication pieces. So.
Thanks. Good morning, Mike Timoney, and I'm looking around. I see some faces I recognize. I'm with the Federal Reserve Bank of Boston, but I actually work for the Federal Reserve Financial Services Organization. We're focused on the payments. I lead a team in there that's focused on fraud and security, and our role really is looking at what's going on in the industry, what are the challenges, what are the vulnerabilities within our systems, and then trying to work with the industry, all of you, to try and figure out ways to solve some of the problems. I heard yesterday and I heard this morning, obviously, some of the issues, and we'll be talking about some of that. But again, Karen just said, we got to do this together, and I think that's the way we got to be thinking about this.
Absolutely. I'm just going to move down over here so I can actually see everybody, I think, in the room. So I think the first topic that wanted to hit on, and I can maybe start with a little bit of background, is just talking about merchant fraud kind of broadly, right? Obviously, when we're talking about fraud, there's a lot of different types of fraud and different issues. And the Fed has its fraud classifier, and you can work your way through to getting to all the different types of fraud. But certainly merchant fraud is one that continues to be a big issue and a big challenge. And it can take a lot of different forms, right? You've got merchants out there that are just outright, selling illegal products or fraudulent products, or maybe they are selling their goods in a deceptive way that's harming consumers. And at least in my practice, where I work with a lot of merchant acquirers, that is a big challenge. Not just maintaining chargebacks and fraud from a business perspective, but from a regulatory and legal perspective, law enforcement does expect sponsor banks, payment processors, ISOs to be watching what's happening and making sure that they're not boarding bad merchants, bad actors that are engaged in fraudulent conduct. And there continue to be enforcement actions in this space when acquirers are found to have kind of facilitated or really turned a blind eye to the fraud that the merchants are conducting. So with that as kind of setting the stage and background, Andy, in the merchant space, based on your business and the work that you do, where do you see a lot of the current threats right now?
Yeah, so I'm actually going to put a little bit of a spin on your question and talk about both from the sort of the acquiring perspective, but also from the merchant's perspective. So if you're a service provider, you're a gateway, you're an acquirer, you're a payment orchestration platform like us, where we see traffic across multiple gateways and different channels. A lot of the things that Andrew hit on are very on point around risk of the business, identifying the things that you're going to identify through vetting and underwriting, and understand that merchant's business, and thinking about setting reserves and the other kinds of controls you may have in place. But also account security, right? So we've seen, attacks on merchant platforms through phishing or the kinds of things like that, trying to gain access to those accounts. So the account security is really important. And if you're a merchant, certainly one of the things we see in the market today is a lot of incoming pressure around card testing when we think about credit cards and those kinds of things, and lots of discussions around there. And certainly as you get into some other markets outside of the U.S., which maybe aren't very credit card centric, and you're starting to see digital wallets or cash voucher kinds of things, the fraud types can change there, and there's some incoming pressure that the merchants need to think about there too.
Yeah, that's interesting. I mean, one of the areas where I'm always interested or thinking through kind of merchant fraud are some of the newer acquiring models that you see out there. Payment facilitators, other kind of aggregators. There are some platforms that take the position that they're the merchant of record, which I think raises a number of different questions. But if you're and what struck me there was talking about, attacks are being made. And so if you're an acquirer and you're sponsoring another entity that's out there that is then aggregating and doing a lot of, how do you manage that, and how do you make sure that everything is kind of lining up from a protection perspective? That's where we hire companies like yours, and thinking about the commercial terms and how you're setting a liability shift for those kinds of things. In a pay-fac model, those entities are usually taking on that liability and that risk, and if they mess that up, they run the risk of they're the acquirer that they're sponsoring not letting them issue mids anymore, and so there's carrots and sticks in most of those agreements. Yeah, I think that makes a lot of sense. Michael, just I know that you don't do quite as much work maybe on the merchant acquiring side, but what do you see just in terms of some of the newer technologies or fraud-related issues when it comes to card not present, QR codes, or other kind of technologies? What do you guys monitor?
So I think you're right. We don't really deal in card, but in my previous career, I managed some fraud card programs, and so what Andy said. Similarly, those new products are the ones that you have to adjust to, right? So when we start to see things like QR codes, digital wallets, et cetera, there's a whole change, right? So it's not just you've got to think about the processes you're changing. You've got to put your security changes in place. It's not just a simple switch. So there's a whole, anytime you have to switch something like that, you ultimately have to take in consideration the security. And a lot of times that gets left behind, right? Or not left behind, but maybe it's more of the second thought. And so it can't be, it has to be more up front. The other thing that I'll throw out there, and this isn't really new, and it may not totally answer the question, but it's come up a couple times already heard, and from a merchant perspective, you have a lot of data, and data breaches are still out there, and people still want them. So again, as a merchant, as those companies out there, the aggregators or the consolidators of this information, they're targets. And so some of the things that we look at from that perspective is really the data breach function, the attack rate, how it's happening, that sort of thing. And so to me, there's still some of the old types of fraud that are happening that are targeting those types of merchants.
Yeah, I mean, I think at least on the acquiring side, as there's more and more partners that you end up working with, just the diligence that's being done, making sure you actually understand, what their security processes are, what their compliance processes are, how they're operating is critical, and being able to vet that and know that it works, and to audit and to test and to stay on top of it. All right, well, let's shift to talking a little bit more about what you're seeing in terms of the recent fraud trends, vectors, data, et cetera. And Michael, maybe kind of kick it off, from a big picture perspective. What are some of the insights that you can share on recent fraud trends, areas of fraud that you're tracking?
All right, so we just put together some information internally, and so there's 4 areas I'll focus on, but believe me, I won't take all of our time, and it'll be fairly quick. Probably the biggest thing we're seeing and hearing from the industry is scams are obviously huge, right? There's a lot of people that are impacted by scams. FBI said in 22 is about $10 billion. The estimates for this year are in the range of $24 billion. And when I talk about scams, I'm really talking about in the sense that someone is being manipulated into doing something they typically wouldn't do. In fact, scams are so big that we actually created a work group that we just kicked off a couple months ago to really try and understand what can we do about this problem, right? So, and people tend to think of scams more around the authorized push payment, that someone's authorized, the fraudster gets them to make a payment on their behalf. But we're also looking at, fraudsters also would like to get your information, your credentials, right? So if they can manipulating you into giving up that information, Megan was talking a little bit about authentication and some of the things earlier, and if I can talk you into giving up your ID and your password or your SMS code or those kinds of things, I can take advantage of it. So scams are big. Second and third, I was going to mention and really tie into a little bit of data breach is causing a lot of other things. So I'm not sure if people know this, but last year in the US alone, there was over 1,800 data breaches. And the average cost of a data breach is about $4 million. Over 400 million people were affected. So obviously we don't have 400 million people in this country. That means people have been affected more than one time. And that's a big deal, right? That's a lot of information. You think about 400 million records. And the other part of this is that I thought was interesting is that 45% of those data breaches contain credentials, login credentials. So when you think about that, all those breaches are giving all these fraudsters the ability to log in. And so what we're seeing from there is two things happening. Account takeover is on the rise again. So it's never really gone down, but it's rising pretty quickly. Because again, I've got the credentials, it's pretty easy to take over someone's account. Or the discussion earlier about phishable authentication, well, all I have to do is phish it and now I can take over your account, right? So there's that. Additionally, new account fraud. So again, if I have all the credentials, I can just go in and create accounts. And so from a merchant perspective or cards and that sort of thing, that's been historical happening and it's still happening. The last thing I'll throw out there, and old is new, check fraud. Who would have thought we were talking about check fraud? I heard some of it yesterday. It came up a couple of times. Actually, at AP Technology, I think they were mentioning it. Check fraud last year reported 680,000, the FBI reported 680,000 reported events in check fraud. The year before it was 350,000. So it doubled in a year. Actually more than it doubled, right? And the estimate for this year is around $24 billion. That's bigger than scams. So I just talked about scams. That's bigger. And so, again, this is check volumes dropping, right? From a consumer perspective, we heard yesterday that's still happening from the commercial. So the dollar value of checks is higher. And so the fraudsters are going in the way of, hey, how do I take advantage of systems that maybe have been not looked at over the last couple of years because we've all been focused on digital, right?
Yeah, they're always going to look for the best opportunity, right? And that may shift over time.
Yeah.
So, Andy, kind of same general question to you. What are you seeing in terms of fraud trends or issues that are keeping either you or your customers up at night?
Yeah, and Michael touched on a ton of them, right? ATO and data breaches and those kinds of things. Whether it's thinking about the card vaults or other kind of secure access tokens, those kinds of things, super important. Both consumer phishing and merchant phishing, like we talked about, trying to source credentials for the merchant accounts to get into the acquiring accounts and those kinds of things. On the merchant side, we see a fair amount of, I think I mentioned it before, but card testing still kind of coming back with a vengeance, so to speak, in the last year or so. Lots of pressure with merchants reporting lists of stolen cards. And as you go into, certainly it's established already, but thinking about network tokens from the different card networks aimed at trying to stop that, right? To reduce the actual existence of PANs out there in the wild and try to tokenize everything. But we're not there in terms of adoption, and so these lists of cards and things are still out there. And they cause a lot of pain for a merchant who's getting their checkout flow crammed with it, and it can really cause a lot of problems there. We talked a little bit too about some of the application push payment fraud. That's something that's emerging a bit as more of our customers start to look outside of the U.S. and even inside of the U.S. with FedNow and certain other things that are starting to come up, and the liability that is still a little nebulous. The UK is starting to do some regulatory changes around liability shift for push prod, putting it back on the sending bank. But it's not that way everywhere, and certainly not in the U.S. So consumers can bear a lot of that liability today.
Yeah, and I want to kind of follow up on that in a second, but it kind of strikes me like, listening to a lot of the issues and the fraud trends that you're talking about, a lot of these are the types of things that I'm sure everybody's experiencing in their daily lives. I mean, I know that I have clients that are reaching out all the time that are, the victims of business email compromise. I got an email from a client yesterday saying, we got an invoice from you guys, is this legitimate? And it didn't look like it, and so, I immediately kind of forwarded to our security team for them to look into it, but you can just see how people are constantly getting bombarded by these challenges, and, if you slip up for just a minute, bad things can happen, right? And it is a big issue, and so I think that's why for a lot of these organizations, probably the training and just building out that safety hygiene as a every single time type of mentality is going to be critical.
Yeah. And actually, just kind of one more thought to add on top of that was you were talking about before the acquirer liability. So if you are a PayFac, if you're an ISO or an ISV, insert buzzword for platform name here. Those kinds of liability shifts can be really important, especially depending on the merchant base you're serving. If you're serving large enterprise customers, Walmart can probably handle an attack. If you're serving sole props and SMBs who are smaller, maybe they can't, and those kinds of things can actually put a merchant out of business or put them under real financial stress. And so as you're thinking about underwriting and vetting policies, that's something else to consider of, it's kind of everyone's problem. As you mentioned, we're all trying to solve the same problem, and a rising tide floats all boats, so to speak.
I wanted to throw in there, because Andrew, you mentioned business email compromise. I started a long time ago in fraud. 2008, though, was when we first started to see business email compromise. It's 15 years later. We're still dealing with it. We're still educating people. Look for these red flags in emails and invoices and things like that. But it's growing as well. It's also listed pretty highly, about $3 billion in losses from FBI reports.
Yeah, I mean, and I think this goes a little bit to what one of the last panel was talking about. And I think it was Troy on the panel talking about biospoofing. I mean, you can put things in place to try to manage some of this, right? Like contacting your customer to actually talk to them to make sure that the right person is trying to change the account. But if you've got the ability to spoof somebody's voice now, if you've got AI. I mean, right now, fraudsters that are doing email compromise, presumably they're, creating a lot of that themselves. Now, I'm sure you can use AI to just scale this out on a massive amount. I mean, so I can see how that is going to continue to be a big challenge.
We have our own Slack channel internally where we like to just share the phishing emails and texts we get from the person pretending to be our CEO. So it happens. And
not to try and educate on AI, but you're right. There's actually a tool out there, Worm GPT, that the fraudsters have that you can start doing business email compromise just by using that. Remember when they used to say, look at the grammar? You don't have to worry about the grammar. Don't learn how to code. You don't need to know how to code.
Maybe the grammar's too good. Maybe that's the
right.
the trick.
So
it looks too good.
So it is designed by fraudsters for business email compromise.
I want to come back to the push payments, though, APP fraud, which has become a big issue. At least it's gotten a lot of attention, right? So, Michael, I don't know if you can just kind of give us a quick overview again of what is APP fraud and kind of how it impacts right now probably consumers, but presumably also businesses can be an issue.
Absolutely. So you mentioned fraud classifier a couple minutes ago, and when we were developing fraud classifier 5 years ago, we were going down the path of unauthorized fraud and authorized fraud. And a lot of people in the room said, we don't need to consider authorized. It's not fraud. It's a scam. We don't care about that. And the group argued, 50-50 in the room. We ultimately agreed that we should keep it. 5 years later, we're glad we did because it's obviously a big issue now. So when we're talking about authorized, it's, again, the scam where someone manipulates you into making a payment, right? So I get a call, hey, we need you to, maybe it's a romance scam, investment scam, you hear all these sorts of things, and so you make that payment. Well, the challenge with that, from a fraud perspective, is there's multiple. One, I'm making the payment. So we heard in the previous conversation around authentication. Well, I'm authenticating. It's my account, right? I'm logging in, I'm making the payment. So any fraud tool that's looking at authentication is going to say, okay, that's good. And it's my money, I'm going to be moving it. So if the bank reaches out to me and says, hey, this looks suspicious, well, it's my money, I can tell them to move my money. So there are some things there from that scam and victim perspective that obviously people are impacted. And Andy just mentioned the liability. We in this country have, and this, again, these are Mike's perspectives, right? We've been conditioned to zero liability. If I have fraud on my account, I call my bank. If I have fraud on my card, I call my card company, all that sort of thing, and they make me whole. In an authorized push payment fraud situation, I have that liability. And so what, no one told me that, right? That's kind of the thought process, right? No one really, I'm just making a payment, right? So I start using one of the apps or whatever to pay you. I don't realize that if I pay the wrong person and I call my bank and then they say, no, sorry, that's where a lot of the issues are today, I think, is that the consumers are feeling the brunt of this type of fraud more than maybe some of the others.
Yeah, and that's where that reality then touches on the legal and the regulatory issues because you can look under some of the legal frameworks, Regulation E, things like that, and you say, okay, this was authorized, therefore, the liability protections aren't going to be there. That kind of a mentality doesn't really cut it if you're talking to the CFPB right. or some of the more progressive members on the Hill in Washington who view their mentality is consumers have to be protected from themselves essentially, and it's the business's job to make sure that's happening. But that's a very tricky scenario where it puts financial institutions in a tough space. Andy, are there any methods out there that can be used either by consumers or by financial institutions to help try to address some of these kind of the risks inherent in this push payment technology that's really becoming more popular?
Yeah, one of the things that I always talk about when I talked about risk management and those things is it's called risk management for a reason, not risk aversion. And so I'm a big believer in while you're building models or AI, to throw out this week's buzzword of detecting that bad activity, you're actually detecting and classifying the good activity at the same time. And so you can use that as a way to reduce friction for proper flows. But when those tools and things detect something that's anomalous or an outlier, those are places where you can insert friction at the right place, right time. And so if you're seeing behavior that's perhaps out of the usual for a consumer or for a merchant account, for instance, those are the things you can start to tag and identify and observe. And the action may be declining a payment. It may be a step-up authentication flow or something like that. But there are ways to do that. And there are a number of providers, some of them are here this week, who offer technologies that do these kinds of things. The other thing that I've definitely seen, and if there's some MRC research, if you're familiar with the Merchant Risk Council, their survey this year, they always have a questionnaire in there around how many fraud providers or risk providers are you using in a stack? And for MRC members, it's usually of like 4 or 5, right? And so it's not that each one is doing the same check. It is a matter of evaluating risks at different moments in that consumer life cycle as you're going through and observing behavior and biometrics, because as we've talked about and you've seen other folks talk about at this conference, authentication is tough and credentials get compromised, and so you have to go beyond just did they have the password to identify the behavior.
Yeah, if you think about authorized push payments, the fraudsters don't have to get past any authentication. Right? They just have to manipulate me. And so that's, all the work and time we spend and energy and resources to beef up authentication, the fraudsters are going a different direction, right? They're going the path of least resistance. And so that's part of the challenge of what we've got to do. The thing from a fraud perspective that, let's say from a bank perspective, they can't just rely on the tools that they used historically. They have to change. And I'm just going to point out that we're getting the 5 minutes, so just so we know. you all were looking at me, and so from a bank perspective, trying to fight fraud, you have to look at it differently, right? You can't just look at the transactional data anymore. You have to look at more than the transactional data, and tools like AI are going to allow us to do that. You know, we all carry one of these, right? We make payments on these. They have a device ID. They have an IP address. We use them a certain way. There's behavioral characteristics and biometrics and all that sort of thing. So we have to. Some of that is just how we look at the transaction. We can't just look at the dollar amount, the time, who it's to, that sort of thing. We have to change the way we're doing this.
And then just Andy, you were talking about some of the tools you can use are maybe introducing some friction into some of these models, but the flip side of that is we're in the age of faster payments, right? And the focus constantly being on being able to do settlement or payments instantaneously. So for both of you, and I guess Andy, we can start with you. How do you see kind of the fraud and the faster payments? How can we have both of these under manage fraud, but also get the benefits of faster payments? How do we achieve that?
That's like a 2-minute question, right? We'll just solve the world's problems. No, I think there's different ways to approach that, and you certainly see different markets and regions of the world approach it differently. So, for instance, Europe with PSD2 introduced all of the SCA requirements, forcing 3DS on any cardholder-initiated transaction, and then having rules for if it's merchant-initiated after that for subscriptions or recurring, those kinds of things. That's one way to kind of do it, but that is definitely like the friction-first thing. But that's a regulatory-driven change and not necessarily an industry-driven change, which is more how the U.S. operates in finding things that work. I think there's a right balance to find of friction in the right place at the right time. I'm not a fan of strictest policy for everyone because it does increase friction. It will impact your checkout conversion. It does impact other kinds of things around that journey. So it is important to find that balance. And the other thing I'll say on that is it's a complicated problem, and it's not a set it and forget it. It is as much about putting the tool in place as it is about the downstream data and monitoring and observing your performance and looking at what that is, and that rinse and repeat cycle of making sure your outcomes are what you want them to be.
Michael, any thoughts on that?
Obviously there's a lot of discussion around faster payments. They've been around for a while. They're obviously getting to instant settlement, and I think there's obviously a lot of benefits around that. But from a fraud perspective, I agree there are challenges that we have to deal with. One, it's irrevocable, right? That's a challenge, and so from that perspective, we need to make sure whatever processes we have before the money leaves the bank, you kind of make sure it's right. It does, it's gone immediately. So it is the speed of time is quick. So if you are to monitor transactions, you better be doing it very quickly too. Because the only other thing is if you start to slow them down, then it's really not as fast a payment anymore, right? And then I think from an educational perspective, education, we got to educate consumers. But at the end of the day, I think if there is some sort of liability shift that there's a lot of discussion about, that could really change the face of the faster payment.
That's actually something we talk to customers and just the market about in general when we're talking about payment orchestration across different regions in the globe of there are risks to those different payment methods, and you may want to take those, you may want to not take those, but just understanding what it is really important.
Great. Yeah, we've got like 2 minutes left, I think, or so. So maybe just kind of last thought from everybody. What would you advise the audience just in terms of, how should they be thinking about fraud? What are some tools or some methods that they should be thinking about using to kind of help minimize fraud that they're seeing in their business?
I'm a big fan of, just user story mapping, user journey mapping, whatever the phrase you want to use for it is, understanding what your business and your flows are and mapping those things out. You may have things that are risky there that you don't know yet, and until you start mapping those out and measuring things, you can't change what you're not measuring, right? So understanding where those different points of risk are and having monitoring in place to know what those are so you can react to them, and if possible, put proactive measures in place is super important, just kind of knowing the game.
So two thoughts real quick. The first one is, when we start to deal with faster payments, it's different than our legacy payments. There are no rules for disputes yet. There are no rules for fraud, so you got to take that into consideration. But then secondly, I think we know they're here. You've got to do it. I believe strongly that we shouldn't be looking at fraud as a secondary event. Too many times in my career, it was always like the fraud piece is in phase 2, or it's out of scope for phase 1. Yeah, right?
Phase 2 never comes.
Yeah, and it never comes, or it keeps getting delayed. And you can't do that. We've got to take fraud into consideration as we evolve products and as we evolve our processes.
Yeah, I think that makes sense. Kind of taking a holistic approach and having a real plan and thoughts in advance about how you're going to manage it, because it's not just, there's no single tool that you're going to implement that's going to solve all of your fraud issues. No single service provider. You mentioned in somebody's technology stack, they may have multiple, right? So having a good understanding of where the fraud risks are, making sure that you kind of have the right systems in place and that you're testing them continuously, making changes as needed, and then I think the training for the staff and your frankly the education of the customers, all of that has to be done in kind of a coordinated fashion if you're really gonna be able to address all of this. So I think with that we are at time. So thank you, everyone. Thank you.